In fact, from 2008, this stock literally fell 99% all the way from 430 to 1 rupee 50 pice. In the June 20 and July 20, you see that there was a strong rise in price and you see the spike in volumes, right? This usually indicates the chart is getting better. In fact, from this level, the stock made a huge return of 1680%. That means your money has multiplied 17 times, right? Hello, investors. Welcome to Chart Shastra, where investing is made simple with the help of charts. This is the part 2 video of 29th Annual Wealth Creation Study conducted by Motilal Oswal. In the first video, we have discussed about India's biggest and fastest wealth creators. In this video, we will focus more on the theme study of this year's report, which is creating wealth through bruised blue chips. They have defined Bruised Blue Chips as the companies which have fallen more than 50% from their 5-year high. Why do they want to invest in these names? They have mentioned reasons like these companies are one of the largest businesses in India and they are available at a fairly reasonable valuation, and this could indicate that they would offer attractive returns in future. In fact, since they have corrected a lot, they might offer an asymmetric risk reward ratio because the lower side would be much less now. And as these businesses were been here for the last 20-25 years, the chances of them dying out would be very low. The entire report has talked about how you can identify these names. They focused a lot on fundamental factors like valuation, sector recovery, and management changes. But I found technical analysis patterns which were mentioned in the report more useful. So let's discuss these patterns. The first one is double bottom. It is a classic reversal pattern where the stock forms two lows almost at similar levels, signaling a strong support here. When the price closes above the neckline with a strong volume, it indicates the end of the downtrend and the start of potential recovery. Next is inverse head and shoulder pattern. It is one of the most successful patterns in the technical analysis. Here you can see that the stock has formed three lows with the middle low much lower than the other two lows. So it is called the head and there is this neckline. Whenever the stock breaks out of this neckline, it indicates that the trend has reversed and usually the stock would make a massive move from here. Next pattern is rounding bottom. It is also known as saucer pattern. This was famously written in the book How to Make Money in Stock Market by William O'Neill. It shows a slow shift of selling pressure to buying interest by forming a rounding curve. The breakout happens when the stock clears this resistance level with a strong volume. This pattern reflects the sustained accumulation by institutional players. Next is flat base, which is almost similar to a stage 1 kind of thing. We have discussed this stage analysis in my past video. When the breakout happens out of this range, it indicates that there is a new momentum in the stock. This is what we usually call the stage 2 up move. So these were the patterns which I also use in my trading and investing journey. Now let's see whether these bruised blue chips have worked in the past. They have talked about the famous examples like Mahindra and Mahindra. This was a turnaround story driven by sectoral tailwinds and internal restructuring. Then CG Power is one of the name which benefited a lot due to management changes and operational improvements. And the most recent example is Suzlon, where the entire renewable sector has seen a tailwind and also this stock is coming out of their debt issues. In this year, they have showed the names which are probably comes under this Bruised Blue Chips watch list. They have indicated names like Adani Stocks, Gujarat Gas, SBI Cards, Tata Elxsi, DMart, IRCTC. In fact, you see that these three names were very popular in 2020 bull run. And Asian Paints, Berger Paints were one of the most institutional favorites for last 15-20 years. So now let's jump into the charts and see how whether these stocks would be worth our time or not. Okay, guys, now let's look at the charts here. This is Mahindra and Mahindra chart. We would discuss the past bruised blue chips here. The stock has corrected 70% from its peak, and you can see the stock has formed an inverse head and shoulder patterns. I know that this is bit different from the just picture which we have seen earlier, right? This usually happens in technical analysis. The real life chart patterns would be a little bit different from the textbook pictures. As when the breakout happened here in the neckline, this is the usual entry for aggressive investors who want to risk a little bit. Although your risk here is only 12%, then the stock moved all the way up to this previous resistance and it has consolidated here. You can see this is a kind of similar to flat base, right? This is where the breakout has happened, and once the breakout has happened, the stock rallied smoothly almost 200% over the last 3 years. There was a minor shakeout here, but immediately the stock came back above this 200-day moving average. In fact, the stock gave multiple entries with consolidation here. And during the most recent market correction too, the stock did not correct much, showing that there is a strong relative strength in this name. Now let's look at CG Power. In fact, this stock has corrected almost 95% from its peak, but after COVID, in the June 20 and July 20, you see that there was a strong rise in price, and you see the spike in volumes, right? This usually indicates the chart is getting better. Again, here you can see the flat base pattern, although it is not as long as we have discussed earlier, but it still works. And this is the aggressive entry for aggressive investors and traders. Then the stock faced a little bit of pullback and resistance at these multi-year resistance. Once there was a breakout, all you can see that the stock has journeyed smooth. In fact, from this level, the stock made a huge return of 1680%. That means your money has multiplied 17 times, right? That's what the blue past bruised blue chips opportunities offer. Next, let's look at the most famous example, Suzlon. As everyone knows that I'm going into a monthly time frame. In fact, from 2008, this stock literally fell 99% all the way from 430 to 1 rupee 50 pies. Every time you have seen that there was a pattern here that forming a round base pattern, but it didn't happen. That's why I always recommend that you only take the entry when there is a breakout, because as you can see here that the stock was consolidated in this 2010 to 2012. Again, a similar kind of consolidation and spike in volumes were seen in 2014 and 2015 too, but never below. Here you can see there is a massive volume, although the price was very low, hence the volumes were very high. This is the breakout here. Now let's switch to the weekly time frame, and from then you can see the stock has made a return of almost 500% return in last 1.5 year. Now let's focus on the current opportunities which were mentioned in this list. Most of these were Adani names. As you can see, the stocks still they were in a lower downtrend, and there are no signs of recovery here. You should only start focusing on these names when they break out of this level. You can see the similar pattern in Adani Green too. Only above this neckline, you should start focusing on this name. Similar kind of action is seen in Gujarat stock. And this is Tata Elxsi. In fact, I made a detailed stage analysis case study on Tata Elxsi. You can check out the video here. The stock is currently in a long stage 1 consolidation, which we called it as a flat base. Whenever there would be a breakout here with strong volumes, that would be the perfect entry. But till then, entering and or buying this business, we doesn't know how long it would consolidate in this pattern, because almost the stock has been in this range for last 3 years. We don't want to lose money, right? Same story in IRCTC too. You would only invest here when there is a breakout here. This is Berger Paints and Asian Paint charts. In fact, both of them look almost similar. Recently, Mr. Raamdeo Agrawal has told that these were the business he was closely watching to. But I have a contrary opinion. I would not put my money here unless the stock has seen a change in character. Especially, I need a buying force from large institutions, and the price should break out at least this level. If there is a breakout, I would start looking at it, but till then I won't look at. In fact, I would right now avoid Asian Paints because it is falling after a very long time. It has broken this crucial resistance level too, so you should be a bit alert about this stock. You should have your own thesis, no matter what famous investor or me telling that this is a good opportunity or this is a bad opportunity. You should always have your own confidence. IOC look much better than previous charts, right? I would start focusing this name when this 200-day moving average, the price closes above this moving average, and there is a rising upward slope in this line. In fact, SBI card did not made any money for last 4 years. This is the long trend line. Whenever there is a breakout out of this trend line with large volumes, it signals that the trend has changed. Then you can start picking out these names. Similar story in DMart. Right now, it doesn't look much interesting on the chart. Let's only focus when there is a strong buying force and the change in character of the stock. So, guys, after analyzing these charts, I found that these names still stuck in stage 4 downtrend. Investing in such names not only risk your capital but also wastes your time. Instead, focus on stocks with stronger recovery potential and clear stage 2 uptrends. As we conclude this video, let me summarize the key takeaways for identifying and investing in bruised blue chips effectively. Always observe the chart and look for patterns like double bottom, rounding bottom, and flat bases because these can signal early signs of recovery. Take minimal risk, build your position size accordingly, start small, let the stock prove itself before committing larger capital. Never hesitate to cut your losses early. If the stock breaks key support levels or fails to meet expectations, exit quickly. Don't put your money in dead stocks. There are many better opportunities out there in the market. I hope this deep dive into bruised blue chip has provided you with valuable insights. Remember, the goal isn't just to identify fallen giants, but to invest wisely in stocks that have potential to recover and deliver strong returns. If you found this video helpful, make sure like, share, and subscribe to my channel. I will continue bringing you the actionable insights, technical analysis, and market trends to help you navigate the market more confidently. Don't forget to hit the bell icon, subscribe my channel. Thank you for watching. I will see you in next video.